A strong ending for the S&P last week, followed by a weak start at the beginning of this week, is pretty characteristic for stocks nowadays. There is no general direction, no real big trend at the moment. The US dollar continues to weaken, but is now hitting major support levels in the US dollar index, as you will see when we discuss the monthly charts for asset classes. After 3 poor matches, the Dutch people did not have much confidence in the game versus the USA. The players proved the nation wrong with a solid win over the US. Sorry guys, sorry about that. And now everybody thinks that we will win the tournament, of course. Oh, and in case you missed it, we're talking about the World Cup soccer here, played in Qatar. Hello Sector Watchers, welcome to the show. This is the 155th episode of Sector Spotlight for Tuesday, the 6th of December. I'm recording it on Monday the 5th after the close of the US markets. My name is Julius Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. It is the first Tuesday of the month, which means that we will address the state of the trends on the monthly charts after completion of the month of November. These long-term trends will keep us grounded as they shine some light on the longer-term movements that are underway, which we may miss when we stay too focused on the day-to-day or week-to-week movements without zooming out every now and then. Ladies and gentlemen, this is Sector Spotlight. Here we go with the monthly charts for asset classes, and let's start right away with the most important asset class, at least for most stock investors it is, and that's equities. That's the S&P 500. If we look at that monthly chart, then we have to conclude that the downtrend is still in play, is still intact. That series of lower highs and lower lows on a monthly basis is still there. We had a very good month of November after we bounced higher in October. And that 4100 resistance area that was mentioned all over the place so far has been working. The last bar is showing the first few days of trading in December. And as you can see, that 4100 area, 4100 level is still respected. So from that perspective, selling pressure is still there and the downtrend is still in play for stocks. If we move to government bonds, then this is the aggregate bond, GOVD, which holds all maturities on the US yield curve. And here also we have to conclude that that downtrend is still fully intact. Now the history for this ETF is not too long. So when we switch to IEF, that gives us a little bit more history. We can see that the decline in October, this is the month of October, bounced off a support level that went back to a couple of highs and a low in, from 2008 to 2011. So that level was still respected 2 months ago, and we're now rallying, and you can see that we're moving into that resistance zone between 98 and 100. So it's for the bond market, it's going to be pretty crucial to see how this month, the month of December that we're now in, so that's the last bar here, but that obviously still has almost a full month to go. So the month of December, January, how's that going to develop, and whether we will see a new lower high being put into place, or are we looking for the October low to become the low, and will we start to move higher? It's difficult to say, but straightforward interpretation, straightforward observation here is that the downtrend in bonds is still intact, and that means a trend upwards for yields. And in the IEF case, that is the 7 to 10 year segment on the yield curve. When we go to investment grade bonds, then they took a beating basically since the start of this year. And also in line with what happened in IEF and GOVT, we're bouncing here, and you can see that we're running into trouble just above 110. That's a very long-term major resistance level. It used to act as support number of times, and it is expected to come back as resistance if we can get there. But the downtrend here in these investment grade bonds is still very much in play. The same can be said for high yield bonds. Not as bad as the corporates, but you can see that the most important level, which was around 78, 80, that was broken. That's a level that went back to 2010. That's broken. So the upside potential, if we just follow the rule that all support becomes resistance, then the upside potential for high yield bonds is fairly limited, while the downside obviously is wide open. There is a new support level being formed around 70, but we went as low as 60, 62 back in 2008 and 2009. So the outlook for high yield bonds at this point in time, not very strong, I'm afraid. And then commodities, that's an interesting asset class, because obviously we had that very nice rally, and when we started breaking back above these major levels, that was very cool. And the start of 2022 looked really promising when we took out that overhead resistance, and we almost immediately rallied towards the next barrier around 40, 41. But then it stopped. This is a 4-month period where the highs of, in this case, DJP, they kept stalling around 41. Now they come down, and last month, so in November, we managed to stay above that rising trend line. But in the early days of December, and again, this month is not finished yet, of course, but we're not off to a good start for commodities. And that is something that I was still expecting for this asset class to be in a very long-term turnaround phase. And it's still very well possible, but when we actually break this rising trend line, and even worse, if we drop back below 32, then there is a possibility that we need to go back all the way back to 30, maybe even 26 to make it a real long-term bottom. So it's not necessarily the end of the turnaround, but it's certainly, if that happens, if we're going to see these dropbacks, it's going to be a delay in the turnaround before it really starts moving higher. And we see kind of similar image with GSG, not as pronounced, that break at least that we saw in DJP, but you can see the same sort of pattern where we started off very well. Then 2022 obviously started out very strong with a rally moving all the way up to the resistance near 26.75. We never reached that 29 area, and then we dropped down. So if we hold above this trend line, then we're still potentially in to put in a new higher low, which in this case would be around 20. If that doesn't hold, then here again in GSG, we could go back to 18. And I mean, it wouldn't immediately negate the whole turnaround scenario, but it will definitely put a damp on it, and definitely put a delay on it. So here's the US dollar, the US dollar index. And I think that is a very interesting chart, because we had that massive breakout above 104, and that happened, when did that happen? In June. And then we got a really strong period of dollar strength until we hit a high in September, and then we are coming down hard. This is a pretty crucial level for the US dollar. We do need to hold above 104-ish. I could argue that it could go back to, let's say, 101, which is these highs here and this one here. And if you take that extreme out, so in worst case scenario 101, but 104 preferably. If that holds, and we're going to see upside movement for the US dollar index, then we are very likely in for a renewed visit of the 114 area, and potentially the all-time highs that are around 120. So US dollar currently at a pretty crucial level. I'd love to see it hold here. If we drop back below 101, the scenario doesn't get much stronger, but it's still possible. But I would not be as bullish anymore as I am as long as we're holding above 104. So that is a pretty crucial level for the US dollar. Now the digital equivalent, if you want, is Bitcoin, and that looks a lot less strong. We definitely broke below that 18,000 level last month. You can see that here. This is the month of November with a close well below that red line, which is 18,000, 18,400. And I think it is very well possible that we will see a drop back towards the 12.5, 13,000 level for Bitcoin. The last month's low, which was around 15,500, will probably gonna provide some form of support, but the upside is really limited towards 18,000, 18.5, while the risk is all the way to 12.5. So Bitcoin, I'm afraid it's the crypto winter at the moment, literally there. And I'm going to wrap up this segment here with a look at the long-term chart of the yield curve in combination with the S&P 500. We've updated this chart multiple times here in Sector Spotlight, especially on these first Tuesdays of the month when we look at the monthly charts. And it's getting more and more inverse. Where we had a few minor inversions in the past 20 years, so to say, we are now at an inverted level that we only find in the early 80s, and that is, whoa, that's something new. And if you look at what happened in that period, then you can see that the market, it's hard to see here, but, and this isn't the log chart because the original chart is the yield curve itself. I need to do this a little bit better, I'm afraid, but bear with me. This level of yield curve inversion, so it happened a lot of, you can see how jiggly that was in the early 80s. But we went from the start of 1980 all the way down to August 1982. That was a long decline after and during a yield curve inversion. And then when the yield curve started to flatten, the market started to rally. And then you can see kind of similar here. You see an inversion, which is preceding a sideways and then down movement. And when the yield curve starts to flatten, the rally moves. And then these are not that strong. These are minor yield curve inversions. This one is quite strong inversion. And you can see that the inversion took place during the formation of a peak. And we see the market dropping further when the yield curve flattens. And you can see that here again. You can see that drop below during that period. And then when it comes out, you can see the decline. Here it is the other way around. So it looks as if I find it hard to read, but this level of inversion is quite significant. So I'm going to try to compare it with the strongest inversions that I can see in history, and that's the one here in the early 80s, and that's the one here in the early 2000s. Less so here, and maybe this one. So this one here was only minor. This one here was only minor. Let me put it like this: it's not the strongest of signs. This is one of the things that is holding me back of becoming super bullish on the S&P 500. We do need to see something happening with this yield curve inversion, I'm afraid. And after our look at asset classes, we're going to look at sectors, stock sectors. And please remember that where we usually use relative strength and relative performance and trends in relative performance using relative rotation graphs, in this show, the first Tuesday of the month, we look at the price trends. We look at the long-term price trends that are developing in asset classes and now in sectors. Basically to get a handle on the long-term trends that are in place aside of their relative performance. I think it gives you a better handle on direction of markets every once in a while to look at those longer term price trends. So let's start, we go over them one by one. And let's start with the communication services sector. If you look at that chart, I think you can quickly agree with me that that downtrend is still in play. And after breaking below that 180 support level, which was a major resistance level for many, many years, that is expected now to come back as resistance. And that means that for communication services, the upside potential is fairly limited, while there is pretty significant downside risk. So for communication services, the trend remains down. Next one up is consumer discretionary, one of the major sectors in the S&P 500. You can see that massive rally that we had after breaking out of that already rising trend channel. Almost a blow off top, peaking around 1700, and now the downtrend, which took us all the way back down to 1050, almost 1025, 1050. And we did find support in this area, but over the last 3 months, the monthly highs have come in lower. And as you can see here, the month of December was off to a weak start. So the downtrend in consumer discretionary is still in play. That weakness is still there. And we really do need to hold this support area here to prevent this sector from falling further. And you know, because it's such an important sector, if consumer discretionary starts to accelerate lower, that's bad news for the S&P 500. If that happens, if we drop below, let's round it off at 1025 at next month's close, then I think we seriously need to take into account a further drop back to that rising trend line, which is currently coming in around 900. So this is a pretty crucial sector to keep an eye on. Next one is consumer staples, the defensive counterpart of the offensive consumer discretionary. As you can see here, even consumer staples is in a downtrend. This lower highs, lower lows series is still there. We rallied very close to the previous low here in November, came in around 805, around 800. So that resistance area is very much intact. And we're very close to that resistance area right now, which means that the downside is all the way open back to that 700 level. Now, this is a defensive sector, so if you play offense, defense, and with the pressure on the S&P 500, I wouldn't rule staples out, but it is a downtrend. We can't deny that, and the downside risk is much bigger than the upside potential for this sector. And then we go to the only sector in the universe that is still in an uptrend, and that is energy. As you can see, that move started back in 2020, is still ongoing. We had a big drop back at the start of the year to that 500 level, which was very well respected as support. And we're bouncing back up. We peaked above that level last month and closed below it, and as you can see, the month of December has started kind of weak, but the series of higher highs and higher lows is still in play, and basically we're eyeing 740. When that breaks, that's a new all-time high for the energy sector, and if that happens, we could see a real strong acceleration to new highs for this sector. So only sector in an uptrend in the S&P 500, really pushing to overhead resistance near the all-time high. If that gives way, for more acceleration expected. The next sector is financials, and here also we saw a strong rally after that upward break, put in a new high, dropping back where old resistance started to act as support, and that happened twice. The first time here in June and July, and then more recently in September and last month in October, previous month in October. And out of that low, October was a really strong month, and we had a good follow through in November, bringing us back above the resistance area. So resistance between 580 and around 600. And I've marked resistance around 600, and you can see that we just literally peaked above it a little bit. So the high here was 602, and now in December we're already dropping back. So that 600 area definitely is an area to watch together, or maybe the range between 580 and 600. Nevertheless, financials coming out of a low, putting in something like a double bottom when we can actually move beyond that 600 level and then go all the way up. We're not there yet. In terms of trend, financials has no trend because this high is higher than the previous high, and this low is lower than the previous low. So it's one of the sectors, there are a few more in the universe at the moment, where there is no clear trend available, no uptrend or no downtrend. So it doesn't check the boxes for higher highs, higher lows, or lower highs, lower lows. If we go to healthcare, we see something similar. Here also, no clear pattern of higher highs, higher lows, or lower highs, lower lows. What we do see is that the healthcare sector managed to hold up above its old rising resistance line, is now starting to act as support. And we did manage to break above that resistance area. We're pushing against the all-time highs here. So this is actually one of the stronger sectors inside the universe, with, I think, limited downside risk, if you wish, and well, I mean, limited upside potential as well. But if we take out that previous high, then healthcare is pushing to new all-time highs. And that, as you know, is usually a very strong sign. Again, a defensive sector. If we break higher, more acceleration upward is expected for this one. Moving on to industrials. From a relative perspective, one of the better sectors, but this is price. And as you can see here, industrials also is moving sideways, there's no trend. We took out the previous high, we took out the previous low. It's kind of in limbo here. I'd say the all-time high around 910, 915, that is resistance. And we may face support around 825, but we could even go down to 700 and pretty much nothing will happen with that trend. So from a price perspective, this is much more of a sideways movement at the moment. And then technology. Here the downtrend is very much intact. You can see that this series of lower highs is still there, lower lows are still present. And I mean, there is a serious need of buying power to turn this one around, and I don't think it will happen overnight, and I don't think it will happen within the next month. If you look at this pattern here, we do need a lot more, and we do need to first see a new higher low come in before we can start getting really, really bullish for the technology sector at the moment. Here is materials. Again, like industrials, from a relative perspective, a really good sector, but here we have price. And you can see that the sector bounced back above its former support, then acting as resistance, and we're now back above it. So that's the good news from a price perspective. That is solid. Means that the way is open, the pattern is open towards 580, and we can find some support just below 500 for the material sector. Trend is kind of non-existent. It's more sideways orientated. Real estate, on the other hand, has a very clear trend, and that is a downtrend. Clear series of lower highs and lower lows. We're bouncing out of that support area, which you can see is nicely respected. This area here between 205 and 210 came back a number of times over the last 15 years, bouncing out of that support zone right now. But also here, we do need a lower high first before we can turn this whole thing around. And it doesn't seem to be doing that in the next few weeks. So this remains a downtrend for real estate. And then finally, there is the utility sector. And this is also not a real trend. You can see that it's flying above its previous high and below its previous low, moving more sideways. So this is kind of in the middle of a long-term range, making it sideways, upside potential probably as big as downside risk. So utilities are predominantly moving sideways. Mind you, when a lot of sectors are in downtrends, sideways is actually pretty good. As usual, we wrap this up in our table where we can find basically the only sector with an uptrend, energy, as I told you. And then in the downtrend, we've got communication services, discretionary, staples, technology, real estate, and the S&P 500 overall. So together, that means that almost 54% of the market's in a downtrend, only 5's in an uptrend, which means that about 40% of the market is moving sideways, which is indecisive. And you can see the various downside risks and upside potentials. And I think that the downside risk, and yes, it is judgmental, it's my call on where these support and resistance levels are, but they're like, you know, the major previous highs and lows, basically, that's what it is. That the upside potential is very limited, while the downside risk is quite big. So all in all, I remain very, very cautious for the S&P 500 as a whole and most of the sectors going into the month of December. And that's it for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern on StockCharts television. And you can also catch replays on YouTube or any of the on-demand channels. I'm looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.